Good morning, friends and fellow traders. This is Doug Campbell with Right Way Options, and this is the morning market prep video for January 8th, 2025. Hope everyone's having a great day, great afternoon. It has been kind of a crazy morning for me already, so I'm a little bit behind, so let's get right to it. If we take a look at what happened overnight, Asian markets, well, a little bit on the mixed side last night. Shanghai was up by 0.52%, but Hong Kong struggled, closing down 0.86%. India was lower by 0.08%. South Korea did manage a little bit of a gain. We had the Nikkei down, and Australia was bullish on the day, up 0.77. If we take a look, the Chinese yuan fell to a 16-month low as we continue to see the dollar strengthening as currencies around the world seem to be running into pressures. If we take a look at European markets this morning, here we've got European markets, well, a little bit of a mix. They've been bouncing around here quite a bit, but right now the DAX is up just 0.02%, and the FTSE and the CAC have now reversed to being down. FTSE down 0.16%, CAC down 0.72% so far this morning. So feeling a little bit of pressure, and they've got some economic news coming their way, and they had originally just shrugged off some economic numbers that well, we're just not good with an unexpected fall in German industrial orders. And they originally shrugged it off and really started moving to the upside, but now starting to see a little bit of pressure build there in Europe. And also, we had bullish moves going on this morning as I was writing the blog. Futures were bullish, and we were looking for another day of a pump in the gap up. But that's also changed here this morning because we have received those mortgage numbers here already, and well, it's not looking good. Mortgage rates have hit the highest level since July, and obviously it is really having a negative impact here on mortgage applications and things like that this morning, which should not be a major surprise. That's our first economic data point of the day. We've kind of slammed Wednesday and Thursday economic data points into one day, so we've got a lot coming our way here this morning. Let's take a look at oil prices. If we take a look at XLE, well, XLE has been enjoying a nice little run to the upside this morning, showing just a little bit of a pullback here in XLE. But at the same time, we've got oil futures higher. We've got oil at $74.72 a barrel, up 47 cents. Brent crude is at $77.29 a barrel. And natural gas, after getting trumped on pretty hard yesterday, is gapping up once again this morning. Lots of volatility here in the natural gas area, but it is popping up here dramatically this morning, up 18.5 points. If we take a look at precious metals, well, precious metals struggling just a little bit today. Gold right now, gold futures down $2.50 an ounce. And if we take a look at silver, silver is up about 4 cents an ounce at $30.72 an ounce there in silver. If we take a look at copper, copper was up yesterday, but we're seeing copper just moving lower here this morning. Platinum and palladium, however, are a little bit higher, so kind of a mix there. And crypto had a really rough day yesterday, being down substantially, about 5,000 dollars a coin. Well, this morning that is continuing. We've got Bitcoin down this morning, $1,215 a coin, or 1.26%. Ether is down $31.70 a coin, down 0.92%. So having some trouble in there. Now, if we were to take a look at bonds, well, bonds this morning, they're really not helping us out here. The 2-year bonds moved up again last night. When they are at 4.30%. The 10-year bonds have moved up to 4.70%, and the 30-year bonds at this very moment 4.93%, as the market is starting to fear a reignition of inflation, and of course a lot of uncertainty with a new administration coming in and tariffs and things like that on the way, adding to that pressure. So what does that mean for today? Well, how about we settle in, let's buckle up, let's get ready for the Wednesday edition of the Morning Market Prep video. Good morning once again, and thank you so much for being here. I very much appreciate it. I wrote in the blog today, so it's going to be a little bit off here this morning, that another pre-market pump, because we were heading for another pump up in the market in the pre, and it kind of reminded me of. I'm from Nebraska. Our college football coach, Tom Osborne, he's a legend here in the country. He would run a play, and if the play worked, well, they'd just run it again. And if it worked the second time, well, they'd just run it again. And we have seen here in the market where on Friday, they ran the play, people bought into it, chased the market up, and then they whipsawed it down. So they did it again on Monday. They did it again on Tuesday, and it looked like they were setting up another opportunity to do the same thing again here on Wednesday morning. So it might be kind of a nice reprieve to show them that for us to see that the play has changed here just a little bit, and maybe adding a little bit more uncertainty to how we open up the day. So if we take a look at the diamonds, as you can see, pretty serious situation here could occur if those bears continue to find inspiration. Obviously, we held this low in here the other day, and that's going to be really important place to be watching for today. If the bears find any inspiration in the economic data, push down here, breaking down through there would confirm this bear flag in the diamonds, and also confirm that head and shoulders top here in the diamonds as well. So we'll want to watch that closely, and the next level lower would likely be maybe right down into here. Now, if the bulls can find inspiration, I think there might be some reason to have some hopefulness. That big surge that we saw right at the end of the day yesterday, pushing back up, recovering quite a bit all at once. Then if we can see that bullish inspiration today, and we can hold this area price support, then a push up through here, let's start moving up through these areas here and see if we can push back up here to retest that high of Monday. So keep an eye on that if those bulls can get going. Looking at the SPY, also pretty critical situation here on the SPY. This would technically become a lower high in the chart. As a matter of fact, I should just take that line, move it right up there. You can see the potential of the lower highs in the downtrend, and we've got that confusion in this chart because we thought we had a double bottom and yeehaw, let's run to the upside. But now we show a potential lower high, and that big bearish candle yesterday, if we see any additional selling here on the day that breaks back down below this area of support, then I would look for this recent low to be tested. And of course, failing below that would once again create that situation where we've reconfirmed the downtrend here in the SPY. Now, if the bulls find inspiration today in the data, then we could certainly see that pop back up. We could push this back up into that downtrend resistance and resistance in the chart. What would be really important, though, is if we were to push on through and break that big black candle to the upside, that would probably change things quite a bit here in the market really fast. So watch that carefully if those bulls do find some inspiration. Now, if we take a look at our QQQ, we have a very, very similar situation here. where we've got that potential if the bears continue to find inspiration on this downtrend that we've got going here with the lower highs. And again, we thought we had a double bottom, and now we look more like a downtrend here in the chart. And if they can continue to push this on lower, well, we can see if we were to test down in here, probably raise some fear, and if it drops below that area of support, then we have really confirmed the downtrend here in the QQQ. Now, if the bulls can find inspiration, there's every reason to believe that they could too. If they can find some inspiration, well, I would look for that push back up. We could retest this downtrend here in the chart, and then we could see if we could push hard enough to get back up through this big black candle, retest this resistance. And that would probably change things pretty significantly because, again, that would give us that little higher low here in the QQQ. Now our IWM pretty rough in this one, and one of the things that we have seen here for a long time with IWM is it's just lacking any momentum, particularly when we're so hyper focused in just the big techs out there and AI. It pulls all the money out of IWM, and it just can't get that momentum to move. So we've got another bear flag showing out here and a possible head and shoulders top. If the bears continue to find inspiration here today in the day, well, we can easily see down in here, breaking down below there, would confirm that head and shoulders top and that bear flag here in the chart as we rejected this resistance here again, and of course kind of had the double whammy of that little trend that we were testing the underneath side of. So watch that pretty carefully today if that were to occur. Now, if the bulls can find inspiration, then we would look for that pushback up here, maybe a retest of this resistance in the chart. Perhaps we pop back up there to see if we can break through that high, and then we're up here testing this downtrend line that I've got in the chart. So keep a close eye on that in the Russell. Let's take a look at our VIX. Our VIX kind of seesawed around here yesterday, but obviously we are at least this point, we are holding this upside trend in the VIX, showing that fear back in the market. So we've pushed up, pulling back. We still have some resting in here that could be done. What's going to be necessary today, we need to see, if you're bullish, we need to see those bulls push this back down, relieving some of that pressure. And of course, to really solve some of this case is break on through that upside trend. So watch that carefully here in the market. If the bears continue to find that inspiration, well, it's pretty easy to see where we could go. We might push through and break through this resistance up here. You can see where all of these wicks up here are showing us where those bulls are pushing back. But if we were to push on through here, the bears could take over, pushing on up, and we would start stretching up back towards some of these other areas of resistance in the chart, bit on higher. So watch that close. Now our T20s have been whipsawing all over the place, and I've been warning about this all week with the weak breadth that we have seen in the market. And hopefully you have heeded that warning because you didn't fall for the pop and drops here in the market, chasing them in. If we take a look right here on the T2122, you can see yesterday we pushed back down here toward the bullish reversal zone. Now we have just this little hope maybe in here of a little hockey stick on the ice down here, a little bit of hope with that really solid rally at the end of the day that maybe the bulls could come in. It's really going to be data dependent today whether that's going to occur, and right now the bond market continues to disagree with any bullishness that the market puts out. So watch that closely. If the bulls find inspiration here today, well, we certainly have an upside opportunity that's substantial for them to move. And if the bears find inspiration today, well, as we've been kind of chopping around and making a little bit higher highs here along this trend, we've opened up that opportunity that we could push this lower still. So watch that carefully. And then if we take a look at our T2108, well, our T2108 really unimpressive yesterday. Even with the selling that we saw here yesterday in the market, we're not seeing breadth coming in on the bullish wave. We're not seeing breadth coming in on the bearish wave. It's like the market is just waiting for something, and I suspect it's all those uncertainties, tariffs, the inauguration coming up, the beginning of earnings on the 15th, just a lot of uncertainty here for the market. So we're not getting good follow through in there. We've got about 23% of the stocks here, about 24% of the stocks holding above their 40-day moving average, not really garnering any great warm and fuzzies that the bulls are in control, but it's not really suggesting that the bears have really gained any ground either. We're just kind of locked in this range between a support and resistance here on the chart. Now our T2107 did have a significant impact at the low of the selling yesterday. We were actually breaking down below that low in here in the chart, but that end of day, right there at the end of the day, big zooming rally back up, pulled us back up here. So we're still holding in this range. Obviously 43% of the stocks holding above the 200-day. That's a little bit of a failure, and we're continuing to see us decline in that, adding to some pressures. But here's the big one, T2101. We're continuing to see, with all of that movement that we have seen this week, these big whipsaws, market breadth continuing to decline, and I suspect that's going to continue right up until the time we hit some earnings here in the market, and that won't be until next Wednesday. So we've got another week that we could potentially just kind of chop around in a consolidating move as we wait for some of these decisions to get some clarity in them. So watch that carefully here on the day. Let's take a look at our economic calendar for today. And our economic calendar, it is kind of a busy one. We've already had the mortgage applications come in disappointing. We've got an ADP report today. If you take a look, they're looking for those private payrolls to come in lower at 134,000. So watch that carefully. Remember, we saw the job openings report have a big shift to the upside, adding concern and pressure in the market on inflation. If this were to see a surprise increase, that could also create that kind of pressure. After that, we've got our weekly jobless claims. They've moved those from Thursday to today because of the holiday on, well, not the holiday, the National Day of Mourning on Friday, but the market will be closed on Thursday. They are looking for that to come in with a little bit of an increase on the jobless claims to 216,000. Keep an eye on that. We've got Waller speaking. We've got wholesale inventories. They're looking for wholesale inventories to come in at a negative 0.2, flipping from a positive 0.2 on the last reading. We've got petroleum numbers here today. We've got a 4-month bond auction. We've got natural gas prices today, and then a 30-year bond auction. Both of this could be really interesting today with the prices that we're seeing these bonds. It could be very interesting to pay attention to that. And then after that, well, we've got the FOMC minutes. Now, I don't think anyone expects anything new out of the FOMC minutes, but what we commonly see is quite a little bit of volatility around that number. So keep an eye on that. That's coming up at 2 p.m. And then consumer credit. Now, remember, Thursday, we've got a parade of Fed speakers in here, and we even have some earnings that are going to happen on Thursday. Probably some of our most notable earnings for the week are going to be in here on Thursday while the market is closed. So keep an eye on that, because everyone will be focused then on this number here, the employment situation number on Friday. Will it show us that inflation is easing? Will it show us inflation is getting stronger on that employment side? Watch that carefully here for Friday morning. A lot of uncertainty for the market to deal with. And of course, we got a consumer sentiment number in here as well. So let's take a look at our earnings calendar here for today. And our earnings calendar, well, it's a little bit busier here today. First off, this morning we've got earnings from AYI. They will be reporting here this morning. ACI reporting. ANGO coming in. We've got Helen of Troy that will be reporting. Looks like that one's going south. We've got MSM that will be reporting today. There's a nice little pop to the upside. RDUS reporting today, and UNF. Those are the notables for this morning. This afternoon, we've got GBX. Jeffries, probably our most notable for today. Keep that one in mind this afternoon. And PENG reporting this afternoon. Interesting pop and drop here this morning on this. Perhaps they reported early. I don't know. It is slated for this afternoon, however, so watch that closely. Let's take a look at a few stocks that could be setting up for today. But before we do that, everyone, if you could do me that quick favor, if this is the first time you've seen these videos, please click that subscribe button on YouTube and also click that bell icon when it pops up so you'll be notified every time I post a video. And if you find these videos to be useful or helpful, if you could do me that favor, click that thumbs up button, leave a brief comment. That helps the channel to continue to grow. Thank you so much for everyone who does take the time to do that. I truly, truly appreciate it. Well, in looking at some of these stocks, there certainly are bullish trades to be had out there in the market. GameStop continues to look very good, very positive, very bullish here. Not my kind of trade. It's just too memey for me, but looking good here. There's undeniable. That is a bullish chart here. Ralph Lauren continuing to look very good. This is the one we alerted on early this week, and just running really good, continuing to hold up nicely. Now, I had mentioned TTWO as a potential, but boy, TTWO ran into a little bit of trouble here yesterday, pushing down, and at one point in time looked like it was threatening to break this support. It ended up bouncing back, so this volatility affecting some of these really good-looking charts as well. We're going to have to be really careful here because a little bit more bearishness, and we kind of fall off that cliff here in TTWO. Watch that closely, and I got to tell you, there are there's a lot of bearish charts out there to be paying attention to right now. A lot of bearish patterns overall. WBA Walgreens continues to hold up here. Now, you've got to be really careful with this. This is going to report on the 10th, on Friday, so kind of keep that in mind, but also holding up in that little upside move, which is one of the rare ones right now when it comes to this consumer defensive sector. Take a look at Coke, man. Coke, terrible chart. Possible that this could fall off this cliff and continue to be short. PepsiCo has fallen off that cliff and continuing to short to the downside. If you look at like Campbell's Soup making that move to the downside, stocks like Altria putting in that lower high, the possible short there in the chart. There's quite a few in that sector. As a matter of fact, take a look at the consumer staples sector, also showing that bearishness here overall. If we take a look at utilities not looking so good here. Another bear flag, pressing resistance, kind of showing that failure in here. So a continuation here, we could easily see that failure on down and moving on lower. And many of these charts are showing that failure, that we've broken the 50-day, we're rallying back to test the 50-day, and we're showing a pattern that we call the blue ice failure. Now, on the other hand, there are a lot of stocks in the inverse world looking pretty good. Take a look at stocks like RWM for the Russell here, inverse ETF, and what we have here is a nice bullish pattern and a potential rounded bottom breakout. So if you're looking for a long trade, shorting the market, RWM might be a way to go. And of course, you can always go to more of the leverage like TZA, which is a triple leveraged, showing bearishness here. DOG, another round bottom breakout here, looking bullish to the upside here, shorting the Dow. Of course, there's SDow that you could take a look at, which is an ultra pro on this, or 2 times leveraged, showing that bullish pattern in here as well. Take a look at stocks like FAZ. Also on the financials here, showing a very, very bullish potential pattern. If we start to see those financials start to move lower, FAZ might be that opportunity for the upside. And let's take a look at XLF. XLF has been kind of struggling here with this resistance and downtrend. Watch that closely. If we get any much more of a push to the downside, we're going to start breaking these support levels, and I think a possibility of that new low could be coming here in the market. So watch that closely if that were to occur in the financials. Now, other places, take a look at Juniper. Juniper showing some bullish patterns, trying to push on higher, looking good, coming into some resistance. So there is some things out there showing that bullishness overall in the market. Boeing continues to hang in there in a pretty darn bullish pattern. If we take a look at Occidental, I mentioned yesterday, stretching up here, breaking through resistance and downtrend. We're seeing this in several of the oil sector stocks, pushing up through here, resting back now. Look for that next opportunity in Occidental. So there are bullish charts out there as well, right in there with the very bearish. Take a look at BlackRock here. Yikes. Really fell through the floor here yesterday. Looking pretty bearish here on BlackRock. So we've got quite a mix. Means that we probably are going to have some long trades, some short trades. As a matter of fact, we in Right Way Options closed a big portion, at least I did. I closed a big portion of a SPY bear call spread yesterday for a 40% return, still holding the last 25% of that, and that's worked out really, really well here. So having a little bit of hedge here in the market while we've got this uncertainty going on would be a wise thing to be thinking about. So with that, everyone, hey, I want to wish you all a fantastic day. Just be careful of this volatility. Be careful of the whipsaws. We could easily get this gap down here now this morning and then see that whipsaw back up. So just be careful here with this uncertainty that the market is facing over the next couple of weeks. Take care, be safe. See you right back here bright and early Friday morning. Remember, we're closed on Thursday. Y'all take care. Have a great one.